Hey guys, welcome back to my channel. Today I'll be talking about 3 things that markets do. So before you can actually trade the market successfully, you need to rather understand how the market moves, the foundation of market moves. So there are 3 things that market does. One is it breaks out, it pullbacks and trend. Second one is it breaks out, pullback and reverse. And third one is it breaks out, pullback and goes into its trading range. So guys, I'll be breaking these 3 things that market do. I'll be breaking it down and be giving an in-depth analysis. So before I go into it, let's understand that every market has a high and low. So when you say market breaks out, then pulls back and trend, this could happen in any time frame. It could be on the monthly time frame, it could be on the weekly time frame, it could be on the daily time frame, down to the 1 minute candle. It's even applicable to the market sections, the London, the New York, the Asian sections. It's applicable to all of it. So number one, we say the market breaks out, pullback and trend. We're talking about market that is trending. So this breakout could be to the upside or to the downside. It could be an uptrend. So you have market that's breaking up like this. So a market that is going up, so it's breaking out and then it pulls back and then continue to go up. Sometimes when you look at the daily candles like this, let's assume this is a daily candle. Once market is breaking out and then closing above the previous daily candle, you may not really see the pullback on the daily candle, but if you go down to your 15 minutes, you will see where market breaks at, let's say this previous day's high. I can see market breaks out and then it will pull back to the high of the previous day and then continue to go up. So the market is either breaking up, that is an uptrend, or it is breaking down, and that's a downtrend. So that's the first one. Market breaks out, then it pulls back and then continues to trend if it's going up or if it's going down. So the second one is market breaks out, pull back and reverse. So we can have a market that is going up, like it's an uptrend, daily candle is breaking above the previous day's high and then closing above it. Then we have a market that breaks out, have a breakout candle. Let's say we have a breakout candle. This market breaks out of the previous day, then closes back inside. This is what we call a false breakout. A market breaks out of the previous day and then closes back inside. So that's where we see a market that breaks out. We have a market that breaks out, then it pulls back and then reverse. When we have this reversal, could be as market has failed to close above previous day high. We may have another candle that closes below the previous failed candle and then close below the last breakout candle high, and that is where we consider this as a reversal. Personally, that is how I consider it a reversal. So you have a market that breaks out, pull back and reverse. This is the second one. So the third one, you have a market that breaks out, pull backs and go into a trading range. So let's say, for example, this market failed. Market was breaking out in an uptrend and then it breaks out and failed. Instead of closing below the previous daily candle to the opposite direction, it continues to range. Maybe gives you a doji here or an inside day maybe breaks out again and then fail, breaks out again and then fail. So the market will continue to range without giving a definite direction. We're just giving you an inside day. May even break to the low, then closes back inside. So this is where we have a market that breaks out, then pull back and then goes into a trading range. It's not giving you any definite direction. So let's just go into the chart so that you can actually understand what I'm saying better. So guys, for our example, I will be looking at Swiss franc JPY. So as you can see as you can see, we are on the daily chart. So as you can see, market was breaking higher and closing above breakout. This is an uptrend. So this is where we have a market that breaks out, pull back and then trend. And second, we have a market that breaks out, pull back and then reverses. I have a good example here. Where market was going higher and then we have a down candle that closes below the previous candle, the last candle rather, that closed high. We have this red candle that closed below this candle, and we have a small sell for 2 days, maybe got to a weekly zone and then market continues to go up. So we also have a market that pulls back, then the market that breaks up, pull back and then goes into a trading range. We also have an example here where market was breaking higher, was going higher, then it got to this place and then continues, like it ranged for more than 6 days. Yeah, this market just keep forming dojis inside, breaking out, closing in. You can see here market range. It didn't give us any definite direction until broke out here and then gave a small sell. So guys, I have a takeout here, like a little mistake that I have observed. It's not a mistake though, it's something I've observed and I actually want to share it with you guys. So once market closes below previous candle's low, I don't usually consider it a reversal until it closes below the last candle that breaks out high, or the last candle that breaks out low. As you can see, you see that this red candle closed above this doji candle and then sold for 2 days, then got to this zone here, the low of this candle that breaks out high and then reverses and continues to go higher. So a market may just close above a doji candle, below a doji candle, but it doesn't signify a reversal until it closes below the last candle that breaks out and close the breakout. So this is what I as far as it has not closed below this last candle that closed the breakout, I don't consider it a reversal. So guys, this is it. 3 things that market do. If you understand this, if you take your time to study your chart, your daily chart especially, but this is applicable to any time frame, or the monthly, the weekly, the daily, the 4-hour, the sections. Your sections, you can have sections, you can have a market, you can have market breaking out of Asia, then during London it may pull back and then reverse during New York. You can actually also break out during our gap time, market break out of Asia during our gap time. During London it may pull back and then reverse. So this is applicable to any section. You can also have London section where markets might also break out during the gap time, pulls back during New York and then continue to sell. So guys, go and study your chart, because that's the only way you understand it. Mostly go through your daily candles and see how the markets react at each high or low, when market breaks out, when market is ranging. So go through your chart, you understand better. So guys, thank you for watching today's video. Please, if you have not subscribed, do it to subscribe to my channel.